Welcome back to the channel, everyone. Today I want to talk about how Adam Aron could secretly expose the shorts. I also want to talk about Citadel being in trouble, and I want to talk about how the VIX could be showing us signs of what's to come. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Adam Aron will expose naked shorts by accident. So this poster says he's been thinking about what this announcement from Adam Aron could be. I'm thinking along the lines of the following. He said AMC is going to give something to AMC stub holders and shareholders registered with Investor Connect. This something cannot be copied or bought. Maybe it's an NFT, or maybe it's just something digital that can't be copied or bought, or maybe even something physical that can't really be copied or bought or replaced with cash. A tally of the number of shares will be completed, and Adam Aron will be able to present that number to the SEC and the DTCC fairly without much involvement or any kind of collusion, for example. Market makers will not be able to issue what AMC are giving out because it can't be copied. There's also no monetary value, so they can't replace it with a monetary gift. He said this may fit in with what kohrs has said when he was told to stand down by Adam Aron. Maybe Adam Aron has a plan that does not just reward shareholders and also can't be seen as collusion or market manipulation. I do think the kohrs NFT dividend or NFT gift was a brilliant idea, but considering Mark had been talking about it so much on Twitter, I guess it could be considered market manipulation or some form of collusion. I think one of the main reasons why Overstock got away with issuing their NFT dividend or NFT gift or NFT STO was because it wasn't classed as collusion and there was a genuine business purpose. But if it's seen that Adam Aron is only issuing this NFT gift, NFT dividend, NFT STO in order to get rid of the shorts, then it could be considered market manipulation or collusion. And therefore, Adam Aron could be going down this route himself without the help of kohrs, and it may not necessarily be an NFT, just something that can't be copied or bought. This would obviously be a brilliant way to expose the naked shorts and also a brilliant way to give something back to AMC stub holders or shareholders registered with Investor Connect. If you didn't already know, Moomoo are currently running their biggest ever promotion, giving away 5 free stocks valued up to $3,500 each just for signing up using the link below and making your first deposit. So I wanted to break down exactly how you can get each and every single one of these free stocks. When you open your Moomoo account, you get your first free stock valued up to $3,500. When you then deposit any amount, even if it's just a singular dollar, you get your second free stock, also valued up to $3,500. And if you can deposit $2,000, then you get your final 3 remaining free shares, also valued up to $3,500 each. So that's at least $17,500 in free stocks that you could get just for signing up with Moomoo and making your first deposit. Now I also wanted to talk about this guy who's clearly having a bad day. Specialist Merrick Greenbaum works at his post on the floor of the New York Stock Exchange on Friday. Now if you've got some really keen eyes, you may notice that this is the Citadel logo, and therefore Merrick Greenbaum is a Citadel employee who's clearly having a bad day. Clearly Citadel had a very bad day on Friday and could be in quite a lot of trouble. But what trouble might that be exactly? You may remember the other day that I touched on this absolutely massive spike in the VIX. Obviously the VIX is a volatility index tracker, basically tracking how the market is performing and the kind of fear and greed sentiment. When you see massive spikes in the VIX just like this, there's a lot of fear in the markets, and it's usually coupled with the S&P 500 and the Dow Jones being down quite heavily on the day. And obviously if we look at the S&P 500, it is down 2.27% on the day. Looking at it on a monthly basis, it basically wiped out the entire gains over the last month. What this means is that there could be a certain very over-leveraged hedge fund that potentially just lost a lot of money on Friday and could be being margin called and liquidated on Monday. Yes, a 2.27% drop may not sound too significant, but obviously there's going to be some certain stocks that were down much more, maybe 5%, maybe 10%, maybe even 15%. And obviously if you're a certain hedge fund, maybe like Citadel, that tends to use 8 times leverage, if one of your positions is down 10%, That's basically the same as being down 80% on your initial cash investment. Now, while I don't necessarily think Citadel are a fund that's guaranteed to be liquidated on Monday, clearly Citadel had a very bad day on Friday and lost a lot of money. Maybe they'll have to reshuffle some of their portfolio, and maybe they'll even have to cover some of their AMC shorts. Maybe not all of them, but maybe a fairly sized chunk to allocate to some of their other long positions. Now, I also have some other very, very important news. It wasn't that post, it was this post. Last time the VIX had a green day like today was January 25th. Now, I wonder what happened on January 25th, or maybe 2 or 3 days after. Well, obviously after January 25th, a few days later, GameStop saw a massive run up past the $400, nearly to the $500 mark per share. This massive green spike in the VIX could potentially be a sign of the hedgies and the institutions losing control over AMC and GameStop, and maybe over the next 2 or 3 days, maybe Tuesday or Wednesday, we could see some massive price gains in AMC and GameStop. Now, in case you didn't already know, I also wanted to give an explanation as to why 500k is mathematically possible. I don't want to necessarily say a 500k floor, but why I think 500k is actually possible. Now, firstly, I want to start by explaining a few very important caveats or criteria that must be met in order for 500k per share to be possible. Firstly, I think we need at least 10 to 15 billion synthetic shares in issue. If we've only got 1 billion synthetic shares, or 500 million synthetic shares, or 0 synthetic shares, I don't think we could realistically see $500,000 per share. But if we have, say, 15 to 20 billion synthetic shares, I do think it's a possibility. Now, secondly, all 493 million shares that are held by all 4 million apes, or potentially a lot more shares than that are held by the 4 million apes, maybe it's 2 billion shares, or 5 billion shares, or 10 billion shares, or even more, not every single one of those shares are going to be sold for $500,000 per share, because obviously 10 billion synthetic shares being sold for $500,000 per share is going to be more money than the entire world has. And obviously way more money than what's in the DTCC insurance, which is only, say, $60 to $70 trillion, which is the assets of all of the partaking members in the DTCC combined. So how can $500,000 per share be possible, but not everybody's going to get $500,000 per share, and in fact, actually very few people will get $500,000 per share. And this is where the geometric mean comes in. You may remember mode, median, mean, and average from some basic math lessons. And obviously, for example, the median is where you've got tons and tons of numbers and you're finding that middle number. And the geometric mean is fairly similar. Obviously, you've got tons and tons of sell orders all along the AMC price curve. Most of the sell orders are going to be before the squeeze and after the squeeze, and very few sell orders are going to be right at the very tippy top of the squeeze. For example, if you use a simulation that peaks at $1 million per share, the geometric mean and therefore the average price received by most apes is going to be around $11,000 per share. Therefore, if you obviously scale that simulation back a little bit to a peak of $500,000 per share, it means that most apes are going to receive, say, $5,500 per share for each of their AMC shares. When you have a price run, for example, in GameStop back in January, and you look at the volume spread of the number of orders that were placed right at the very tippy top, you're only going to see maybe 1 or 2 sell orders right at the very top, and most of the sell orders are on the way up and on the way down. Therefore, the AMC price could indeed spike to $500,000 per share during the squeeze, but there may only be 1 or 2 apes that sell their shares at that $500,000 price point. Many other apes are going to sell them on the way up or on the way down, with most apes receiving around $5,500 per each of their shares. Obviously, some apes are going to sell before, maybe at $1,000 per share or $2,000 per share, and some are also going to catch higher up than $5,500 per share, maybe $50,000, maybe $100,000, maybe $200,000 per share. And obviously many apes are also going to catch the downside on the other way, on the way down. And therefore, even though the price may indeed spike to the very highest of $500,000 per share, considering most apes are going to be receiving $5,500 per share, actually 5,500 isn't too unrealistic, I don't think. And therefore, while I think $500,000 per share is possible, I don't necessarily think a floor, like a minimum of $500,000 per share, is actually possible. And I do think there's quite a lot of caveats, because I think we need to see at least 10 to 15 billion synthetic shares, if not more. But I do think it is entirely possible, and I do definitely think there will be some apes out there that do receive $500,000 per share. Now, you may remember a few months ago that I discussed zombie stocks on the channel. These are stocks like Blockbuster and Sears that have been relegated to the OTC markets but do still actually exist. They just trade for a fraction of a penny because obviously the companies have been liquidated or bankrupted. Now, the stock hasn't actually been shut down and is still available for trading, but it does trade on the OTC markets, and I do think you have to be like a regulated investor in order to trade these stocks. Now, the reason why these stocks are still around is because obviously many funds and institutions hold very, very large short positions on companies like Sears, and therefore they haven't actually ever covered their shorts. Therefore, they technically haven't ever realized those profits or those gains, and therefore they technically haven't ever paid taxes on those gains. What they do instead is borrow money against those unrealized profits and obviously use that money to invest in more stocks, but they never actually realize those profits and therefore never pay taxes. But sometimes you do see something very, very odd happening in those zombie stocks, which is a massive sudden spike. Why do you see it happening? I think because obviously some of these hedge funds are having to cover some of their short positions in order to free up capital, or maybe just to effectively write it off the books. And what we saw on Friday was Sears Canada Incorporated gaining over 289,000% on the day. The stock effectively went from $0.0001 per share to $0.0029 per share, which is a whopping 289,000% return. If you invested a single dollar into Sears back on Thursday, you'd have around $3,000, which is obviously a 289,000% return. That sounds like a pretty meaty return. I don't think there's going to be any hedge funds that did actually invest in Sears Canada on Thursday, because obviously most of the hedge funds that trade this stock are shorting Sears and have been shorting Sears for a very long time. Now, I personally am very excited for the day that we could potentially see AMC up 289,000% on the day. That would be a very good day for an AMC squeeze. Guys, be sure to let me know down in the comments below what you think about Adam Aron secretly exposing the shorts and what you think about Citadel being in trouble. And if you haven't already, be sure to sign up to Moomoo to get those 5 free stocks valued up to $3,500 each. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.